Breaking news on Rapid Report. An unprecedented financial confrontation is unfolding between two longtime allies, Canada and the United States. In a move that has stunned markets worldwide, the U.S. has frozen the operations of Canada's largest banks in America, effectively cutting them off from the U.S. dollar system. In response, Canada has announced plans to sell over $300 billion in U.S. Treasury holdings, a move that could shake the foundations of global finance. Join us today as we break down every angle of this historic clash, from Mark Carney's strategic countermeasures and global currency swap lines to the shockwaves rippling through markets, mortgages, and gold prices. Before we dive in, make sure to hit that subscribe button, smash the like icon, and share this video with friends and colleagues so you don't miss any updates as this unprecedented economic drama unfolds in real time. In an event reshaping relations between longtime allies, the United States has launched unprecedented financial sanctions against Canada, triggering an immediate and potentially lasting economic crisis between the two nations. Market analysts and economic observers warn that this confrontation could reshape the global financial system and weaken the long-standing dominance of the U.S. dollar. A shock statement that shakes markets. It all began with a brief but powerful declaration by Mark Carney, former governor of the Bank of England and depicted here as Canada's prime minister. In 7 words, he allegedly shook global markets. Canada will sell its U.S. Treasury holdings. This announcement, portrayed as the first historic escalation between two traditional allies, immediately sparked financial panic across international markets. U.S. executive order against Canadian banks. The U.S. responded rapidly and aggressively. A presidential executive order froze all correspondent banking relationships with Canada's 6 largest banks. This move effectively cut Canadian institutions off from the U.S. dollar system, potentially denying millions of American customers access to their accounts and banking services. Analysts describe this as treating Canada not as an ally, but as an economic adversary, a measure unprecedented in contemporary North American history. Mark Carney's strategic response. In response to this offensive, Carney made a bold counter-decision. Canada will now sell its U.S. Treasury holdings. If executed, this action poses a direct threat to U.S. financial stability, with potential sales totaling $319 billion. Within this narrative, the massive offloading of treasuries is portrayed as Canada's ultimate economic weapon against a global superpower. Canada's counter-strategy. Canada did not stop at threats. The country activated emergency currency swap lines with major central banks, including those in Europe, Japan, the UK, and China. This move allows Canada to continue operating globally without relying on the U.S. dollar system. At the same time, the Canada Pension Plan, CPP, announced it is reviewing its holdings and preparing to sell U.S. Treasuries, reinforcing the perception of a comprehensive strategic response. Global market reaction. Financial markets reacted immediately to this escalation. The U.S. dollar index fell by 3.1%, signaling a decline in confidence in the currency. Treasury yields spiked sharply, reflecting increased risk and market volatility. U.S. mortgage rates are projected to rise by approximately 1%, directly impacting the housing market. Gold reached record highs as investors sought safety in the midst of uncertainty. These movements highlight a scenario in which the U.S. dollar's global dominance could be challenged over the long term, with significant geopolitical and economic consequences. 3 possible future scenarios. Sustained dollar weakening. If Canada proceeds with Treasury sales and other nations follow suit, the dollar could lose its status as the world's dominant reserve currency. 2. Stabilization through negotiation. Rapid diplomatic resolution could limit the damage, but the historical precedent would undermine confidence in economic relations between allies. 3. Global escalation. Coordinated counteractions by other countries could trigger a worldwide restructuring of payment systems, potentially favoring alternative currencies or multi-currency baskets. This confrontation between Canada and the United States represents an unprecedented turning point in modern economic history. The combination of direct financial sanctions and aggressive Canadian countermeasures could reshape the global economic order and weaken U.S. dollar hegemony. As markets remain volatile, international attention turns to Ottawa and Washington to see how this historic crisis will unfold. Implications of the U.S. Canada financial confrontation. Strategic weaponization of sovereign debt. Canada's threat to sell $319 billion in U.S. treasuries represents a historic form of financial leverage rarely seen between allies. U.S. Treasury securities are widely considered one of the safest investments globally. A large-scale sale could trigger a spike in yields. Treasury prices would drop, causing yields to rise. This would make borrowing more expensive across the U.S., impacting everything from government debt service to corporate financing. Undermine dollar stability. Global investors could question the reliability of U.S. debt, prompting capital flows to other currencies or assets, accelerating the erosion of dollar dominance. Create a feedback loop. Rising yields would increase U.S. interest costs, potentially forcing the Federal Reserve to intervene. If intervention fails to stabilize markets, the crisis could deepen. In effect, Canada weaponizes the very debt that forms the backbone of the U.S. financial system, forcing Washington to confront the economic costs of political decisions. Global currency realignment. By activating emergency swap lines with Europe, Japan, the UK, and China, Canada is signaling a move to bypass the dollar entirely in international trade and finance. This has several far-reaching implications. Decoupling from the dollar system. If Canadian banks can operate in euros, yen, pounds, or renminbi, it reduces the U.S.'s ability to use financial sanctions as a geopolitical tool. Potential domino effect. Other countries witnessing Canada's success may pursue similar arrangements, weakening the dollar's global reserve status. Strengthening multipolar finance. Institutions like the IMF, the BRICS Bank, and Asian infrastructure funds may gain prominence as alternatives to dollar-dominated mechanisms. This step represents a structural challenge to U.S. financial hegemony, rather than a temporary market disruption. U.S. domestic fallout. The sanctions would have immediate consequences within the United States. Banking sector stress. U.S. customers relying on Canadian banks for cross-border transactions could face account freezes, credit disruptions, or blocked payments. Mortgage and consumer lending shocks. Higher Treasury yields would likely increase mortgage rates by 1% or more, slowing housing markets and consumer spending. Investor panic and safe haven flight. Gold reaching record highs signals a mass shift to perceived safer assets, suggesting loss of confidence in U.S. financial institutions. If sustained, these pressures could create political backlash domestically, with policymakers needing to balance international strategy against economic stability at home. Geopolitical ramifications. The crisis extends far beyond economics. Allies under scrutiny. Traditional U.S. allies may question the reliability of America as a partner if sanctions can be applied so aggressively against friendly nations. China and other powers as opportunists. Nations like China may use this situation to strengthen trade and finance ties with Canada, positioning themselves as alternative economic partners. North American security implications. Economic hostility between the U.S. and Canada could spill over into energy, natural resources, and cross-border supply chains, creating new strategic vulnerabilities. Essentially, the confrontation could reshape alliances and global strategic alignments, particularly in North America and the Indo-Pacific. Long-term scenarios. Looking beyond the immediate market chaos, 3 long-term scenarios emerge. 1. Dollar decline and a new reserve structure. Continued decoupling and Treasury sales could erode global reliance on the dollar, leading to a multipolar currency system dominated by a basket of currencies or alternative payment systems. 2. Negotiated truce with structural shifts. Diplomatic resolution may prevent immediate financial collapse, but the precedent could encourage other countries to adopt similar strategies, permanently limiting U.S. financial coercion. 3. Escalation into systemic financial crisis. If markets panic and liquidity dries up, both countries and possibly global institutions could face severe instability, requiring unprecedented coordinated interventions. This hypothetical confrontation underscores the fragility of a financial system built around a single dominant currency. While rooted in geopolitical tension, the crisis illustrates the interconnection of finance, diplomacy, and national security. Canada's ability to weaponize U.S. debt and bypass the dollar system demonstrates that even global powers can face economic vulnerability when strategic dependencies are exploited. The implications extend far beyond North America. Global markets, investors, and central banks are watching closely as this scenario could signal the dawn of a new era in international finance. As this historic financial confrontation continues, the world watches closely. The U.S. dollar faces pressure. Treasury yields are spiking, and Canada's strategic moves could redefine global currency dynamics for years to come. What happens next could impact not just banks and investors, but economies across the globe. Stay informed with Rapid Report. We'll be bringing you continuous updates, expert analysis, and all the developments as they happen. If you found this report insightful, don't forget to subscribe to Rapid Report, like this video, and share it with your network to keep everyone in the loop. Comment below with your thoughts. Could this mark the beginning of a new financial world order? We want to hear from you.